We have a big announcement to make. So there will be another CE 246A Web3 Entrepreneurship next quarter, winter quarter. It will be also a speaker series. So we'll have a lot of really interesting speakers, like some of the most prominent speakers in Web3 space give talks on different topics, some of the most interesting topics in Web3. A little bit different than this quarter is we're probably going to have a little bit more kind of a deep dive into some of the topics, and also some of the topic will be a little bit more technical. We just assume some of the folks already taking classes, like Dan Bonnet's class, our class this quarter, already have some kind of exposure to crypto, either from the business perspective or from the technical perspective. So sign up. Right now, I think you can register. So just to start, I want to kind of repeat the thesis we had before. Last year there was a lot of money flowing to this new industry, Web3 industry. I received more than $30 billion and raising at an extremely high valuation for very early stage startups. And then the aim of the course is to evaluate this new industry to see which aspect of this industry is more going to create a long-lasting and a positive global impact, and which aspect are more like a bubble. And right now we're actually using this lecture to kind of reflect something we learned along the way with lectures from different guest speakers, and see which part is actually a bubble and which part more like a long-lasting, would change the world and change the future. So this is a bit of agenda. So we'll go over the blockchain fundamentals and use cases, and then I'm going to evaluate the different aspects. It's like a blockchain, DeFi, NFT, and the DAOs, and to see which is real and which is more like a bubble. With that, I'll pass on to Gil.
So I'm not going to give you guys a blockchain 101 yet again. You've done it too many. Economics give us crowdsourced, decentralized tech platforms, right, without a single point of failure. And ultimately, we have a distributed ledger. That's the technology and distributed compute, so that there isn't a single point of failure. You've got consensus to make sure that you have honest actions, and you have cryptography, which is kind of like a timestamp assuring your history, and you have economics to incentivize everyone to appropriately either participate or actually run this platform. But really, what is this enabling, right? So if we think about blockchain as open protocols, right? So this is a bit of an eyesore, supposed to build. But if you think about infrastructure, right, you can move things, you can hold and transfer things, you can own things, you can have identity, you can decide what's truth. In the physical world, these are all defined by governments and local standards. In the digital world, we don't have any of that. So in the digital world, you have all of these walled gardens. If you think about AOL, IBM, and Novell in the 60s, 70s, and 80s, you had these intranets. You could speak to other people on AOL with AIM, but no one else. You could speak to the people within your company. As soon as we connected all of these with open protocols, HTTP, FTP, email, right, that created the internet. So having open standards and open protocols is really where this value is that people can build on top of that. In a similar way, you don't actually own or transfer any of your money. Your banks do. Right? You ask your bank to transfer money via Zelle or ACH, and if your bank disappeared, your money is theoretically gone. It might be insured by the government, right? PayPal and Venmo, similarly. Whereas as soon as you connect all of these into a common standard, a common platform and protocol, now you own your own money and you're transferring your own money, right? You don't own your own health records, you don't own your own stocks, right? If you can create these platforms and these open protocols, that enables an entirely new class of things. I don't know if you guys remember when Facebook had all these games that people were building on it, Farmville and whatnot, and then at some point they all stopped building all this crap. Why? Because Facebook would either copy them or change their code. So as soon as you have a fragmented walled garden, you don't control a platform, you don't want to build on that platform anymore. As soon as you have open standards, now anyone can build really interesting things, and it creates entire classes of things, right? And this is true for identity, where you have hundreds of identities that you don't control. It's true for truth, where you can't even decide what's true anymore, and companies like Chainlink and other oracles are trying to use consensus to define what is actually real in the world programmatically. So now if we take a look at like blockchain strengths and weaknesses. What's it good at, right? Multi-party coordination, because it's open and permissionless. Anyone can come in and out. It's immutable, right? So multiple parties who don't trust each other have a single source of truth. Right? There's built-in trust, so it's Caesar and censorship resistant. You don't have to worry about the platform disappearing all of a sudden. It's privacy preserving, so you can use it and feel comfortable using it with things like, theoretically, your health records, your personal records, et cetera. Right? And we have all these new behaviors in the world where we don't actually trust our institutions. So having a trusted platform in theory is really valuable. There's built-in finance, right, which is both a new channel for communication as well as incentive structures. It creates all these new business models like web payments where, if you think about it, the only actual business models that really work are subscription models and ad models. Why? Because payments are hard and full of friction. If payments become frictionless, all of a sudden that opens tons of new business models. Right. So if we look at where it's weak, performance, it's really slow. Right? And even on L2s where you have like settlement times and challenges there, it's expensive. And even when it's not expensive, it's because utilization's kind of low. Who knows how expensive it'll really be as soon as we get to like high utilization. But it's also heavily influenced by speculation. The user experience is really crappy. Who wants to remember private keys to do anything? Right? The developer experience is really crappy. If you think of the iPhone, it wasn't the first smartphone. The iPhone made all the difference because it made it really easy for someone who's not super technical to develop applications. So if you're trying to develop something for a bank, you don't need to know the details of a smartphone. In a similar way, if we can get to a place where you can develop like that in Web3, a lot more people will be able to develop. Until then, we're stuck with only people that are actually like really heavily knowledgeable in Web3 development able to develop anything. Right? So by definition, blockchain technologies very often are these multi-sided marketplaces. Marketplaces are really hard. If you think of any marketplace that exists, you have to seed one side of the marketplace first. Uber started with like black cabs, Amazon started with books, and they seeded one side of the marketplace. Now you're starting with like 4 5-sided marketplaces. That's significantly harder. Right? So this is a hard problem to solve. Right? There isn't a whole lot of adoption. We have 80 million wallet holders, period. And few digital assets are actually on the blockchain currently. Right? And it's super complex from a regulatory perspective. So there's a crap ton of reasons why blockchain is not good. There's some reasons why it is good. If you're going to build something on blockchain, make sure you utilize one of these, because you have to overcome all of these. And this is where a lot of like the bubble type thing comes in. Right? People try to throw blockchain or decentralization or tokens at everything, without realizing that you're going to have to overcome all of this. And especially now with FTX, no one is attracted by the idea of like blockchain and tokens. It's not a sexy thing. Right? On the flip side, Web2 is really good at all these. So if you think about like what are possible applications, emerging markets where you don't have centralized institutions or financial infrastructure. So you have companies like Bello that's using stablecoin for payments in Argentina. You have like BQ that's doing supply chain tracking and giving wallets to farmers. Right? You have governments that are exploring using blockchain technology. The country of Georgia's put its land registry on there. If you want to give benefits to your citizens, it's a hell of a lot easier if you can directly communicate with them and give them money to their wallets and see what they're spending on. You have ecosystems, right? So we're seeing a lot of corporations and consortiums adopting blockchain, and that's on the bottom there, Walmart, BMW, Citi, but also like in shipping, that's GSBN, or Equity in Europe, it's an ecosystem for the energy markets. Right? We're seeing new types of organizations. Evan Miyazono spoke about Gitcoin, but Drive is like an Uber on the blockchain. We'll see if it actually works. Mastodon isn't on the blockchain, but it's this concept of decentralized social media. Right? You have a lot of, on the marketing side, now that brands can't use cookies because Apple disabled them, how do you get in touch with your consumers without spamming them? right? So there's a really interesting use case of using tokens and NFTs for brands to communicate directly with users and give them promotions directly and actually have direct engagement, whereas right now they're disintermediated by distributors, by social media, by Google, Facebook, et cetera. The metaverse, right? If you think about creating open protocols, the metaverse is multiple worlds that need to somehow be connected. How are they connected? How can we create infrastructure to connect these things? And finally, things like smart cities, right? So if you think about the idea that we're enabling programmatic money and programmatic transactions, now everything can become autonomous and automated in a way that this is actually viable and feasible. Now, where are there blockchain bubbles? Again, if you try to decentralize things, but you're not actually leveraging the fundamental properties of decentralization, right? Is this something that you want multiple people to be able to come in and out of, or is it just like a closed ecosystem? Does eBay need to be, or like does a Nike need to be decentralized? Why? Same with, we see a lot of projects that are tokens just because they're tokens, right? You want to raise money, so you sell a token. Well, what ends up happening is a bunch of speculators buy your token, trade it on an exchange, and you have no control over your actual token or utility, and have you actually built something of value? Right? Closed platforms. Again, if you're a closed ecosystem, you don't need something that's permissionless for people to come in and out. You don't need trust, because you can have trust. Speculation, so all the shitcoins and the algo trading of shitcoins, a lot of the NFT world, right? If you're building something where the primary value is in the token going up, and if you say that it's social, but as soon as the money goes away, no one's using it anymore, you're really just in speculation. Now, there's a lot of good things that came out of speculation. A lot of people built a lot of great technology out of it, but it hasn't had lasting power. And ultimately, we want to build things that are leveraging blockchain to add value. Right? And value needs to come from the real world, which means that real people and real companies need to see value in these projects. And lastly, and this is kind of like, this is a for now, and this is my own personal opinion. So I think if you spoke to people 6 months ago, or even me 6 months ago, if you were building a Web3 project that was only for Web3 users, imagining a Web3 universe, there was real value here potentially because there was a lot of engagement. Now that there isn't, we're really seeing that most of the applications that will have lasting power are building infrastructure where there will be some sort of project that's Web3 for the real world, or just building Web3 for the real world, period. With that, I will let Kuhn continue.
All right, thank you, Gail. So now we're gonna evaluate like different verticals. Right now, the first one's like decentralized finance. So there's a reason why we had the DeFi summer first, like 2020, because that's where you unlock the huge potential of the underlying crypto assets like Ethereum and Bitcoin, and you create a lot of like dollar value on top. And then with additional dollar value unlocked by those crypto assets, some of the money went to other applications like NFT. That's why you have NFT after the DeFi summer, which is NFT summer is 2021 and the DeFi summer is 2020. So it's extremely important, this application, decentralized finance, to push the Web3 technology or the crypto technology forward. So distinction between like traditional centralized finance and decentralized finance. So what do we know like finance today? We call it like a traditional finance or centralized finance. So there are different, basically like a lot of rules. Like if you like use like Adam Smith perfect world where everyone just doing things or acting as an economic agent within the economy, but to their own benefit. But by working towards their own benefit, they're actually benefiting the entire economy. However, there's scenarios where like people or economic agents are like to become very greedy, and they are maximizing their own self-interest and harming other agents in the economy, right? That's where you tend to have a lot of economic crisis in the past, right? So that's where a lot of government have, along the history of like probably like 400-500 years of history, has set up different rules and regulations, etc., to make sure the human greed doesn't hurt like other people within the economy. So all the different rules and regulations. And it's like manual, so not necessarily can be implemented or executed perfectly, and tend to be kind of within each country, or the US or like Europe, and it's not very adaptable, which means that you have something new coming out, it's lagging, right? It's hard to be like adapt to the new environment. And also is fragmented, as I mentioned before, within the ecosystem. And decentralized finance, on the other hand, tend to be like, although it's very new, it tend to be like global and universal and also program-based. So it's programmable and also a set of rule, right? If you have traditional finance, it's a set of rule, and then I would say like decentralized finance is also a set of rule, except that it's not manual, it's more programmable, and also it's transparent. Everyone can see it, right? So that being said, we're actually seeing this decentralized finance, given like we only have like 2-3 years of history of traditional decentralized finance, we're seeing like a lot of traction with decentralized finance. And with this bull to bear transition, we actually haven't seen too much of crash of decentralized finance protocols. Like Uniswap still works, Aave and Compound works, the lending and the DEX is working. However, the centralized finance, who were trying to attack or get into the crypto space tend to crash because they're creating new rules for something new, and in the traditional way, how they do things for the new things or for the new like technology, they tend to fail and they learn from the failure and then come up with new regulations. So that's a case for like companies like Celsius, right? For FTX, just BlockFi, etc. All those companies are using the centralized way to apply crypto or something that's decentralized. And that way might work, but it just needs a lot of learning and since manual and adapting to come up with the perfect way to make sure there is enough safety. So where DeFi works, we have seen, I mentioned earlier, Uniswap and Compound Aave. Although the value went down, but the whole protocol is still working, right? The whole mechanism didn't crash. We've seen clear use cases for stablecoin, and especially if it's USDC it's a huge, like you can get US dollar on crypto, and it's like huge for like a lot of countries where they want to have access to US dollar, but they don't have access to US dollar, and use it for different scenarios. And then we see like payments and the fact that you can program and compose payments. It's pretty powerful. The payments using like USDC or using Bitcoin, Ethereum. So we're seeing like clear use cases where DeFi works and proven works and did not crash during the market condition. And we see like also like DeFi creates bubble. It did not work. Or work kind of temporarily. And also one thing that's tricky about crypto is something that's kind of doesn't work, or like Ponzi scheme, it will appear to be working and might work only also for years, like the case for Terra and Olympus, and have huge traction, but it's not sustainable. It's more like Ponzi scheme. But when you were like kind of back then, like a year ago, you would see something like so big and so new, and it's actually gaining like a lot of traction, have a 10x or 100x. In such a short kind of period of time. So people tend to get confused and tend to think this is just innovation, right? However, after it's not sustainable. So after like a year or two, like those things tend to crash because they're just bubble. And then yield farming, right? There's so many protocols, like just new protocols, and their whole traction, how would they track people is by giving out their new tokens and people can yield farm, and then they create another protocol or yield farming protocol on top. And then I mentioned before, no transparent transfer exchanges, where we tend to have kind of problem. With that, I will transition to NFT, and Priyanka is going to do the NFT part.
All right. right, so is the audio working? I guess it is. All right, so with respect to NFT, real versus bubble, where do I get started? All right, let's do a quick recap. So this whole lecture is about signal over noise. So non-fungible tokens have had a very mixed experience in the Web3 space so far. We have had some of the biggest, weirdest projects come out through NFTs. So to just extract signal is that this is a medium of exchange. It's just like a token, and that's about it. And this is all about proof of ownership and provenance and things like that. If you think about it, we don't talk about fungible tokens as intensely as non-fungible tokens. We have different applications that we talk about, like DeFi, DAOs, and stuff like that. But NFTs are unique in a certain way because we don't have a real-world primitive. If you take a currency note today, that is fungible to some extent, but non-fungible is kind of a relatively new primitive. So getting the mental model straight would actually help us build better applications. So if you can have a tool that can identify anything in a unique way, just like uniquely identifying any particular object in the world, and this identification is edged forever, what would you do with it? Because this is what an NFT is. It can uniquely identify anything, and it's going to be written in an immutable ledger, so you cannot like screw around with it. There's going to be a history of its creation, deletion, who made it, when they made it, and stuff like that. So what would you do with a tool like this is a way to probably think about NFTs. In the past, to talk about real applications that we had, some of them were creator economy. Digital artists didn't have a place to post their artworks. They had to give it to stock companies like Shutterstock or Adobe and people like that. And they took a huge cut, and there was just this whole middleman issue. So now we have creator economy where any digital artist can post their work without having to like put an ugly watermark or something on top of it. And they're going to have collectors who buy the work for the address that minted the work, for the provenance. And stuff like that. Now we also have identity where any on-chain activity can be bundled and shown as a person's identity. This all goes back to the previous mental model which we spoke about, which is unique identification and immutability. Events and tickets, there are so many different concepts trying to bring NFTs into the picture and give tickets as NFTs. So after the event, you could probably sell it or use it as a commemorative thing and sell it in a few years for like a lot of money. Fantasy sports, we have this company called Sorare that was very interestingly famous for people who follow football and NBA stuff. They did a lot of stuff with fantasy sports and NFTs because it made sense with the mental model. Social media, we had Lens Protocol, which built a protocol on top of which anybody can build social media apps. Every comment, every like, every post would be considered as an NFT, and then you can start trading it. So when you connect with someone, you get their NFT in your wallet and stuff like that. In the future, anything that basically could fit into the mental model could possibly be considered as an application. Tokenized real estate is something that's being considered. We had an event this afternoon with the Blockchain Club. I'm not sure if you guys attended. Game assets and virtual lands, any literal metaverse we talk about today, is considering this whole aspect of having an immutable decentralized token server so that nobody can possibly have like a centralized dictatorship over these assets. And fashion is also a very, very, very fast-moving industry. In fact, the fastest of all. They're trying to adapt these things because, as Gil mentioned, customer retention and identifying who the influencer is, and all the Gen Z TikTok influencer culture is transitioning towards this, as we need to have good relationship with people who do the marketing and the fashion brands and stuff like that. So these are all the real stuff. to talk about the bubble, we have had extensive amount of bubble so far in NFTs. We have had random PFP projects making, I don't know, thousands of images and selling it to random people. NFT theft, in fact, works in people randomly stealing images and minting it to be something else, and the obvious security vulnerabilities that come with anything that is related to crypto, phishing attacks and stuff. So NFTs are prone to a lot of bubble because this also tends to target market that is not directly technical, artists, fashion industry, and people like that. So it has been a relatively more vulnerable space compared to DeFi in the others, but hopefully it would all decrease and people would build meaningful stuff in time to come. And over to Phil to talk about DAO.
All right, DAOs. So yeah, very quick recap. What's a DAO? This is a slide from our speaker here. Decentralized, autonomous, and organization. I think the one thing I don't agree with his definition is he forgot the people in here. So you can't just have like any administrative or functional structure. You do have to have people in it for it to be an organization. DAO. So, I mean, in the DAO space, people really like to believe that this is completely novel and that we've never had this before. We have had this before quite a long time ago, actually. There are lots of different models that have built something that is like a DAO before. So these are from some of the readings from the DAO class that you had. We've had Hacktivist Collective, so anonymous. They've built something that is quite similar to a DAO, just without voting. You have collectives that built a drone together. You have open source software development projects. And even pirate crews have had like extensive participatory decision making, so they're quite similar to DAOs. So yeah, we can learn from the past, and we can kind of figure out what is actually why might DAOs be really helpful. There's a long list of reasons why they might be helpful. So one of them is we now have internet native companies. That's really big. Internet native companies that are linked to a way of transferring value natively without having to go to intermediaries. We can do very cool things with it if we use that power correctly. We can leverage all these kind of crowd-based mechanisms, such as crowdsourcing and so on. It's been discussed in literature as distant search, so basically being able to draw on things that are kind of very, very far away from the competence that you have in your company or in like whatever organization you've built. So you can build some really, really interesting innovation projects. Then there's some literature from like actually the 2000s that argues communities are really good at creating knowledge products because there's more trust in them. You have higher resistance to government and governance capture, so not some dictator can come in and just like capture your project and do shady things with it, as just recently happened in FTX. Some people argue people will work for less because they think voting is an incentive in itself. And people have hoped that you can do more participatory decision making kind of like a more democratic kind of organization. And then you can use incentive mechanisms and hopefully use all these nice powerful incentives that you can do for tokens to capture positive externalities that are created by a community that you have. But if you do talk to some people who've been working in DAOs and who really understand the DAO ecosystem and who have spent a lot of time there, they're usually quite negative about them. And they're usually quite negative for these reasons. So far, DAOs are not working super well. They're inefficient, they're ineffective, so they are very slow. They have frequent breakdowns of communication, internal conflict. They don't handle growth well. As a company that is trying to scale and doesn't grow well, that's a problem. If you put a DAO and a VC-funded startup next to each other, because these DAOs are so inefficient and ineffective, usually the VC-funded startup will win and outcompete the DAO. And so far they've been based on, a lot of the successes have been based on some of the unsustainable value drivers that we've discussed before, including Ponzinomics and all these other things that currently is happening in the crypto space. One other thing that I want to highlight is regulatory arbitrage. So just because you can break the rules that are happening in certain countries, that's probably not a sustainable business model going forward. And the big promise of these DAOs was that you make the world fairer and more equal, and that hasn't really happened either. So most of the times in DAOs that are kind of profitable, you have VCs or founders or some kind of other insider holding a lot of the governance tokens, a lot of the tokens that give you some type of output. So yeah, all in all. DAOs do have a lot of promise, but at the moment, as they're going, they're not realizing a lot of it. And we will have to do more research to figure out whether this is because of bad mechanisms, bad technology, or if there's some type of fundamental issue. So the other thing we have to find out is what contexts are DAOs really good at. So it might be that certain problems are really, really good for being tackled by a DAO or like an online community, and certain are not. We don't know yet. The one thing that seems to be the case is it's not always the case that you just put democracy into something and it's going to be way, way better than bureaucracies. Usually there's a reason if we have an organizational form that's been working well for 100 years. So probably DAOs are not just going to replace everything. But yeah, maybe I'm wrong. So I'm going to be doing some more research on this and let you know once I figure it out. All right, who's going to take this away? Oh, Aaron, fantastic.
All right, so to discuss some gaps and opportunities that we see in blockchain today, if you look at just the performance of blockchains, so Ethereum running 10 to 15 transactions per second, L2 settlement times and delays, just the cost of running transactions, multi-dollar gas fees to run really simple compute. The user experience in wallets, I don't know how many of you have tried using a wallet. My favorite example is Avalanche, where you have 3 different Avalanche chains, and if you move your tokens to the wrong address within your own wallet, you lose them. Okay, this could be improved. Likewise, the developer experience. It's lots of languages, fragmentation, Solidity, and Rust are a great place to start, but there are many new languages coming out. As these other things standardize, you'll be able to start building marketplaces. And marketplaces like the App Store truly don't exist yet. And to drive further adoption, you'll need those types of marketplaces to make the experience easy for users. We only have about 80 million wallets today. Another kind of gap and opportunity is the regulatory complexity. So because you have different regulations in different parts of the world, and in particular in the US, we don't have regulations at all, but we have lots of uncertainty. It creates kind of risks as you build a new product. Just imagine you're building a new financial product. Now, places where you have opportunities to address some of these gaps right now, I would say most VC funding is going towards infrastructure. That's everything at the compute layer, it's infrastructure with users, it's everything in the left-hand column here. And digital asset tokenization, so think like things in games and that sort of thing. Also digitization of the physical world, so Taylor Swift tickets, right? That would be nice if that were handled better. Developer tooling is an opportunity, again, to address the gaps on the left-hand side, user experience. Analytics and risk management are really coupled into the regulatory side of this thing. So it's not just building things to make the regulators happy, though that's part of it. It's also what happens when you send tokens to the wrong address? How do you build an insurance policy to prevent that? And then regulatory solutions, especially in the zero-knowledge proof space. You can use zero-knowledge to build compliance tools without revealing your data. So that could be really helpful in something like medicine or taxes or what have you. So now, concluding the course and sort of circling back to our thesis here, in Web3, what's a bubble and what's actually going to be transformative infrastructure? And, look, the answer is pretty simple. So just like in Web 2, we had, early experiments, pets.com, and people learned things from these experiments. And so you had a whole wave of companies in the dot-com crash around the year 2000 in the late 90s. And many of those companies, people laughed at them because they said, oh, well, who would have thought about shipping dog food for free? It's expensive, it's heavy. But then the next generation of companies learns from that and builds truly transformative platforms and technologies. So blockchain is in that unique space where the last generation of companies, you could just kind of release a token, and you then hire some people, they sign up for 4chan, they shill your token, and you get the token price to go crazy. There's nowhere in there where there's real value for the users. And so that's now changing. It's changing on the investment side. And so now it's really simple. You want to build a Web3 company, build something that people want. And that was true in Web 2, that was true in Web 1, that was true before the internet. If you're building a product, you build something that people want to buy. Now, in blockchain, we're in this cool place where lots of early experiments are failing, like right now. And so you can learn from all of them and then go build new companies. But it's early enough that most anything that matters actually hasn't been solved yet. We don't have good wallets. We don't have good developer tooling. There's no good like name service, like DNS. I mean, ENS is very limited on Ethereum. Just really basic stuff you'd want. There's no good, I want to run a zero-knowledge proof, just hit prove, and all the deployment infrastructure happens. A lot of the software is still sort of academic code. So, if you go on to AWS and you fire something up on, say, Lambda, it just runs your code for you. In blockchain, it's like start reading white papers and downloading things off GitHub and then looking at documentation that's 6 months outdated. And so all of these things are problems that can be solved right now. And they're all things that really add value to the world. So we think it's an exciting time in blockchain because there's so much to build and so many of the early failures have already happened. And the space is well funded. And so it's just a unique time in the space. Reminds me of the internet back in the late 1990s and early 2000s. With that, we're running this course again next quarter. And we believe that the course number will be 246A again. That is still to be confirmed. And it'll be in this room at the same time on Mondays at 4:30. We've already been lining up exciting guest speakers for you. So I believe the CEO of Alio is confirmed. Yes? Confirmed. Awesome.
Fly from a different state just to give you guys a guest lecture.
Yeah, so CEO of Alio flying in to come talk to you guys, and many other exciting guest speakers in the works. If you have somebody in particular who you'd like us to drag to campus because you'd like to talk with the person, say it's some high-level CEO where if you just emailed them out of the blue and said, hey, my name is John, will you spend an hour with me talking? And of course the answer is no. But if you say, oh, will you come and talk to a Stanford class? And would you give a guest lecture? And then they go, oh yeah. So if you have anybody like that and you want us to bring them to campus, let us know and we'll give it our best shot. Yes, you can take this multiple times for credit. So either it will be 246A again, which is what we think, or it will be 246C and D, but we're trying to keep the number of course numbers down. What else? I think that's the end of the deck, right? It is. So yeah, I guess we have 5 minutes left. Should I open this up to discussion, Q&A, questions?
I just have a logistic question. Next quarter, are the speakers going to overlap with this quarter's speakers in any way, or are they all going to be new speakers?
So the question is, will it be new speakers next quarter? And the answer is yes. Yeah.
Yeah, we're also trying to have the course be much more technical and dive a lot deeper. We want to be able to ask the hard questions. So this course was at a very kind of surface level, and we're going to assume that people have taken either the technical courses like CS251A or have technical background and really get into the meat of a lot of the topics.
Cool. Any other questions? No? Okay. I think just as a closing note, I want to observe that you all have a very, very special community here at Stanford when it comes to blockchain. So my background is I've done several startups. I graduated here with a PhD. I've worked with different startup accelerators around the country. And when I have these conversations with startup accelerators, every single one of them is going, oh, we should start a blockchain program. So how does this work? What's a blockchain? Oh, it's a ledger. Oh, who do we talk to? Oh, how do we build companies there? Oh, A16Z has a big fund. Maybe we should get in on this. And here at Stanford, what you have is one of the top research groups in the world working on blockchain. You've got the blockchain club that is more connected than any of the startup accelerators I've talked to. You have this course, you have other course offerings, you have the Stanford Blockchain Accelerator. Even just the guest lectures that the blockchain club runs where they're bringing in all these high-level people. When you go talk to people outside of this community, it's like a lot of legwork to get those conversations to happen. So given that the space is so early and there are so many things to build in blockchain, if you want to start a company, you want to build something new, you've got ideas, I would just say go for it, because if it works, great. If it doesn't work, you'll be an expert in this field that's like growing really quickly. So, so just a thought, use the community you have here. Everybody who runs the course is happy to help you out, and come to the blockchain club events, come here next quarter. Anything else I should plug, guys? No? We've plugged everything. Okay, great. So thanks for coming to the class this quarter, and hopefully we'll see you in the winter.